Moving on to the third topic of personal finance for this week, appreciating trends in the economic and financial environment. According to the IMF World Economic Outlook as of April 2021, the trends in the financial environment, inflation, taxes, and economic cycles can affect financial success and enhance the need for financial planning. There's a greater need to assess personal and economic factors that influence personal financial planning. We'll take a look at the life situation and personal values of each person, and from there determine marital status, household size, and employment, major events in their lives such as graduation, marriage, career change, having children, retirement, health and critical illness, to name a few. Values that influence spending and savings decision and the particular adult life cycle stage they're in. In getting started, you will be needing an emergency fund, which is money for expenses arising from the onset of sudden emergencies. You'll have income protection, which is the money to protect you and your family against life's unforeseen events. Moving up, you will need an education fund, which is money to provide the best quality education for yourself or your children. Savings for milestones, which is the money to fuel future dreams such as car, dream vacation, or business. And in preparing ahead, you will need a health protection, which is the money to cover medical expenses related to accident, critical illnesses, hospitalization, or long-term care. And a retirement fund is definitely needed since it's the money that will provide you with a comfortable retirement in your golden years. When you want to leave a legacy, you will need to have an estate transfer fund, which is the money you leave behind for your loved ones, your chosen charity, or foundation. Economic factors. Economics is the study of how wealth is created and distributed, and we need to understand the forces of supply and demand when it comes to setting prices. The economic environment includes different institutions from various countries, for example, the central bank, Federal Reserve Bank, and its role in the economy. Economic recoveries are diverging across countries and sectors, reflecting variation in pandemic-induced disruptions and the extent of policy support. The outlook depends not just on the outcome of the battle between the virus and vaccines, it also hinges on how effectively economic policies deployed under high uncertainty can limit lasting damage from this unprecedented crisis. We look at certain economic conditions such as consumer prices, and these are consumer price indices, which measure changes in the price level of a weighted average market basket of a consumer goods and services purchased by households. For consumer spending, the total money spent on final goods and services by individuals and households for personal use and enjoyment in an economy. And when there is inflation, prices are rising and purchasing power is falling, which means that a $1 that buys less than it used to. But when inflation spikes too high, people can't afford to buy as much as they could before, and corporations may start to lose sales, causing stock prices to drop, and this can create a drop in investment value. On the other hand, when there are low inflation, this can indicate a healthy economy, which can be good for the stock market and stock prices. For interest rates, the amount charged on the top of the principal by a lender to a borrower for the use of its assets. When interest rates increase, stock prices tend to decrease. However, some types of corporations, such as banks and mortgage companies, fare better when rates increase, and so do their stock prices. When interest rates drop, stock prices usually do. And normally, the interest rates are set up by the Federal Reserve or that of a government-related agency. The other economic conditions we need to know has to do with money supply, and it is all the currency and other liquid instruments in a country, economy, on the date it is measured. On the other hand, unemployment is the percentage of the total labor force that is unemployed but actively seeking employment and willing to work. Housing starts is another indication that will let you know if there are new residential construction projects that began during the particular month and are considered a key economic indicator. Moving on to other economic conditions, these are the gross domestic product or GDP. It's the total monetary or market value of all finished goods and services produced within a country in a specific time. In other words, it measures the economy as a whole and lets us know if it's growing or shrinking. Trade balance, on the other hand, is a net sum of a country's exports and imports of goods without taking into account all financial transfers, investments, and other financial components. And lastly, the stock market indices measures a section of the stock exchange. It is determined by calculating the prices of certain stocks. There are 6 ways the economy affects your portfolio. The state of the economy, meaning how a country uses money and resources to produce goods and services, greatly affects stock market activity. Whether the economy is growing, shrinking, or standing still, it influences stock performance. To understand the impact of the economy on your portfolio, it helps to see how different economic factors affect stock prices. With the bull market, the investor's confidence is high and stock prices rise as most stock holdings will increase in value. On the other hand, with a bear market, investors are nervous, stock prices decrease, and many stocks are undervalued. This can also be an opportunity to scoop up good companies for bargain basement stock prices. And when there is a market bubble, investments are overvalued and their prices are much higher than they're actually worth. And once people realize that stocks or other investments cost too much, the bubble will burst and the prices plummet dramatically. And this can be dangerous for portfolios where the investors bought in at the highest price and can still hold to those investments when the prices hit rock bottom. For global influences, the global marketplace influences financial activities. Local companies compete against foreign companies for dollars or other currencies, and balance of exports and imports are also looked into. Normally, the global perspectives remain highly uncertain more than 1 year into the pandemic. New virus mutations and accumulating human toil raise concerns, even as growing vaccine coverages lift sentiments. The other global influences refers to the foreign investments and their role in the money supply, and the level of money supply does affect interest rates. The global growth is projected at 6% in 2021, moderating to about 4.4% in 2022. The projections for 2021 and 2022 are stronger than in October of 2020, according to the World Economic Outlook. And the upward revision reflects additional fiscal support in a few large economies and the anticipated vaccine-powered recovery in the second half of 2021, and continued adaptation of economic activity to subdued mobility. There is high uncertainty that surrounds this outlook, and related to the path of the pandemic, the effectiveness of policy support to provide a bridge to vaccine-powered normalization and the evolution of financial conditions. These are the global influences that we need to look into, as well as economic conditions that we are faced with when we want to plan out a very good personal financial plan.